Originally a holiday to celebrate being single as a counter to Valentine's Day, Singles Day in China is now the biggest shopping event, beating Black Friday, Cyber Monday, and even Prime Day. Last year, the total value of goods sold during the shopping bonanza totaled $157 billion. That is more than 4 times the $35 billion that US shoppers spent last year during Cyber Week. That's the period from Black Friday all the way to Cyber Monday. This year, Chinese smartphone and consumer electronics company Xiaomi claimed record sales across platforms. JD.com said transactions and order volume reached record highs as well. Alibaba also saw a gross merchandise value increase, and Lululemon saw transaction volume increase 260% from last year. Now, for more, let's bring in Han Tan in Abu Dhabi. He's Chief Market Analyst at Xinity. Thank you very much for joining us today. Right, so Han, these are very big figures, and there were subdued expectations, though, for this Singles Day in China. What is this showing? I mean, a healthy growth or else underlying good consumer confidence? Do you think there is already a certain degree of stimulus in the economy, or that essentially the crisis that we see in the property sector in China will remain limited to it?
Yeah, so in short, given those headline numbers that you mentioned, I'm looking beyond that and still adhere to that muted narrative, right? Because if you look at some of the finer details on the numbers, it required some major discounts in order to get those kind of top line numbers, not just in total sales, but also in volume, right? So if you look at the broader macroeconomic data, it still points to a Chinese economy that is still struggling to recover. And we'll get a data dump from China later this week as well. So again, I would look beyond just one-day sales to look at really how sustainable is this recovery, which really has proved underwhelming so far.
And Han, do we know which types of products had good results this year and which, products disappointed, if any, for now?
Yeah, so I'm still looking at some of these broader figures at an industry level, so to speak, right? So, for example, earlier you mentioned property. I think that's a good barometer because about 20% of China's GDP is actually held up within the property sector, and that includes other sectors that are related to it, right? So beyond electronic goods or durable goods, I'm looking at the property sector because it has a greater meaning for not just house wealth contained within Chinese households, but also wealth for the broader economy. And as you pointed out, some of the risks that have plagued the sector for years now, and rightly so, has even got policymakers worried because that is such an important sector.
Very important litmus test then on the Chinese economy. Han Tan, thank you very much.
Thanks for having me.
And now let's go to other top stories from around the world. Japan's producer inflation slowed more than expected in October, suggesting cost pressures that had been driving up prices are starting to ease. The year-on-year increase in input prices for Japanese companies came in at 0.8%, marking the slowest pace of growth in more than 2 years. Earlier this month, the government approved a $112 billion stimulus package to fight inflation. Turkish Airlines is reportedly in talks with Airbus to expand its fleet with an order for 355 new aircraft. According to Anadolu Agency, executives from Turkey's flag carrier met with Airbus officials in Istanbul ahead of the opening of the 2023 Dubai Air Show. If agreed, the deal would mark the airline's largest order in its 90-year operational history. And Australian bank ANZ has reported a record surge in annual profits of $4.7 billion. That is due to a period of fast rising interest rates and a growing demand for its institutional banking services. Profits were up 14%, but the bank's shares dropped by more than 3% as investors fear the bank is preferring mortgage volume over profitability.